The survey says a rise of 8,000. 8,000 from 207 to 215,000, and that 207,000, well, that's 1,000 higher than originally reported last week. If we look at continuing claims, a week in the rearview mirror, we moved from 1.677 million to 1.699, so just shy of 1.7 million, slight rise there. Yield curve, some major flattening yesterday, of course, based on that quarter-point cut. The dollar index just soaring, not necessarily the most logical response that one would think, giving the quarter-point cut, but then again, everything about central banks seems a bit illogical these days. Andrew, back to you.
Okay, Rick, thank you for that. Steve Liesman, I want to get back to you in Washington this morning. What are you thinking?
Yeah, Andrew, if your destination is more rate cuts and you want to get there in the RV camper of weaker economic data, well, you can't get there from here. 215 on the claims. It's just not. You have not had the weakness that expresses the concern on the part of businesses firing people that suggests that you're really going to have a weak economy here. And all of this points us to, by the way, let me read you what Jim O'Sullivan says from HFE. He goes, the trend in employment may be slowing, but dramatic weakening is unlikely without jobless claims trending up. That's not happening. And all of that points us to the jobs report tomorrow. We're expecting a pretty healthy report. The ADP was pretty healthy, looking for pretty decent numbers here. So, again, it may be that while Powell is excoriated today, that he's proven to be kind of smart tomorrow if that number comes in that 150 to 200,000 range. Let's take a very quick look at the probabilities here before the morning ends here, and you can see where we are. 44% chance of a cut in of hold in September. That's new, by the way. Well, hang on now, it's reversed. 56% chance of hold in September and 44% chance of a rate cut. So that's kind of reversed where it was 71% chance of a rate cut in December. That's where you get that next cut really being fully baked in right now, guys.